Meanwhile, Homechoice International has posted a jump in full-year earnings. This as it grew fintech customers and rapidly expanded its digital footprint. The group said its strategy is delivering robust growth across all its operations and is well placed for further profitable growth through new customer acquisitions. Homechoice International CEO Sean Wibberley joins us now with greater insight on the performance. Thank you so much for your time, Sean. Let's start off with that top line. In this difficult trading environment, it's quite rare to get that strong double-digit growth in revenue. So what's powering up your revenues?
Well, revenues are coming across from all of our trading lines, retail and our financial services side. Retail is on a strong recovery. They grew their profits by 85%, and that's indicative of their omni-channel rollout strategy. They're rolling out showrooms where customers can now touch and feel the products, where before it was all done at a distance. Customers are really appreciating that. There are now 37 showrooms, and the plan is to grow those to 60 at the end of this year and 100 in a couple more years' time. So retail really doing well and growing on itself. And then the Weaver fintech business, really strong growth in customers from the buy now, pay later business pages now.
Okay.
We're booking over 100,000 customers a month, and that's translating into gross merchandise value at all of our merchants. And then the lending business grew disbursements 31%, really strong. We're acquiring customers from the market and internally in our cross-sells within the ecosystem, and just enjoying really good flywheel effect in terms of our demand.
Let's drill into the lending business in that fintech division. You talk about acquiring customers from the retail ecosystem, but also acquiring customers. I'm wondering about that specific composition there of your clients and also how you're managing risk there.
Yeah, so chiefly the fintech business, Weaver Fintech, is acquiring customers at over 100,000 a month into the buy now, pay later product. That's a viral word of mouth product that customers adopt to, allowing them to make payments in 3 installments at the till, which makes things more affordable. It's a no-brainer kind of product. Customers really love it. And on the FinChoice side, we are cross-selling to Pages Now customers, and we are acquiring from the open market through lending affiliate websites. So we are garnering digital customer demand, managing of risk. So at the end of 23, we booked a bit too much risk, which came through as write-off in the first half of last year. And we had some trouble with our implementation of a new technology for our collections area. But we then pivoted the business to focus more on existing customers and drove a lot of demand there and reshape the credit performance. So we ended the year really strong and healthy from a credit point of view, and we had nice demand across all of the financial services lines.
And I'm wondering, just with the cycle that we are in now in terms of the credit environment, if you are then expecting more of an influx for your lending products?
Yeah, well, so the interest rate environment may or may not be improving at the moment, where one's generally accepting the rates are going to come down, but world events are maybe slowing that down a bit. We see that as a positive to us. It makes our loans more affordable. It makes our cost of capital more affordable. And it obviously also makes customers have more free cash in their wallets for their other expenditures. So the environment is also challenged by what might happen with VAT in the next day or so. That would obviously put a squeeze on customers' disposable income. But we as a business, we take cognizance of the macro environment, but we very much focus on our customer and what she can afford and how her circumstances evolve from a day-to-day basis.
Yeah, and of course we will be hearing more on the budget. Hopefully that happens tomorrow, on whether there will be any movements there on the VAT that you speak about. Just as you know, the fintech ecosystem, understand that there is a lot of cross-selling, lots of different products that feed into one another. What is the vision there in terms of the ecosystem that you are building for consumers? I also saw that you also have non-credit products there, including insurance.
Yeah, absolutely. So we have a suite of products in the ecosystem covering personal loans, a credit-backed wallet, payment products, both the buy now, pay later product that's been in the market for 3 or 4 years, and a newly launched Pay Stretch product, which is a pay in 12 product, which customers can use at the till to spread a larger ticket item over 12 months. And we've had value-added services. We have a range of merchant products where consumers can find merchants and their products and then drill down into their websites and transact. So this whole ecosystem is linked together digitally. Customers are all on their smartphones interacting with these products, integrated into merchants. And we see this becoming a flywheel effect. So customers come into the ecosystem on the buy now, pay later product, and then get exposure on these digital platforms to other products that we have, and then we cross-sell into those customers. So right now, 20% of our customers have been cross-sold a second, third, or fourth product, and our vision is for that to be 50%.
Okay. Well, let's drill into the retail portfolio. You've already mentioned the growth there, and I guess one pillar that has supported growth there, which is the omni-channel approach. But I'm just wondering also, in this constrained environment for consumers, how are you managing your margins there?
Well, the margins that the merchandise team have been able to serve up last year, we saw an increase of 270 basis points in our margins. So this is buying the right product and promoting it well within the showrooms, and also some advances in our data analytics where we've been able to target cohorts of customers better to offer the right product at the right price to the right customer, which has improved our conversion rates and thus our sales at the nicer margins that we've been enjoying.
All right. Well, as we wrap up the conversation, just talk to me about the outlook for the next reporting period. What are the pillars of focus that you will be honing on?
Yeah. So with the Weaver FinTech business, it's driving the cross-sell within the ecosystem. We've nailed the acquisition, and that continues to grow, and I see that growing into the future. But it's the cross-sell we want to get right, where customers take multiple products digitally through the ecosystem. The new PayStretch product we see really growing well this year after piloting it in the Q4 of last year. I think it's going to be a real hero product in our ecosystem, because it leverages Pages now and our credit engine in order to service retail credit for the customer. And then retail will be growing their showrooms and growing their digital chat engagement with customers to affect sales and get customers touching and feeling their products in the showroom.
Well, thank you so much for your time and for your insights there, Sean. Much appreciated. That was Sean Wibberley, CEO for Homechoice International.